Check this stream on your social platforms. Oh, all right. All right, we are live now. There's what I see, what I can see. This is just technical analysis. Does it give us any actual forecasting ability? No, let's sometimes yes. Let's see. But this is just the analysis of what's going on. So we had this sharp move down, low move up. And so far we've had sharp move down, sharp move down. So in some sense, things are getting worse. Morning, Randy. Are you back? So in some sense, things look like they could be getting worse. We had slow down, fast up, fast up, kind of a fast move down there. So you can definitely see how things have changed though. This down move was one of the strongest. And I think on the Dow, it might even be more. Let me get a measurement on this. Let's see. That's a 4.8% this last move, which is quite a bit. From the top, 5.4%. But now let's go over to the Dow. From the top of that down to here, 5.64%. It's almost the same. S&P 500, 4.86%. So which one was the most? I forget the last number. I think it was 5.68% for the Dow. The Dow, the strongest. And also, if you noticed on the Dow, it's been straight down through all of it. I don't know how much is that of that is a coincidence. Well, yeah, I don't think so. I think that's where it's coming from. It's coming from industrials, inflation, but really these three big red candles are from rising geopolitical tensions. This one, and then what happened yesterday, just I don't know about you, but it just felt like continuation. And everyone's saying, oh, support might be, down here at this pivot. Okay, why wasn't it here at this pivot? Why wasn't it here at this pivot? The concept of support doesn't, the reasons for the movement right now are not because of what was going on here. Meaning the economic, how can I put this? The potpourri of factors that created our bull market move over the last 6 months or whatever it was, 4 months. The potpourri of factors caused the movement to be the way it is. Those potpourri of factors are not the same now. If they were the same and we needed to correct and we needed to price correct because of price to earnings ratios or economic reasons, then it would make sense that we would hold pivot points because we're still under the same. I still can't think of a good analogy, but potpourri of variables. A thousand variables that are creating the contained system of price movement, right? but that's been just shot out of the water the last 3 weeks. It's been about a month. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's actually been two weeks of trading, but it's been like 2.5 weeks. And the reason why is because of the rising geopolitical tensions. They're rising, and so it's important to realize that war has no bottom. That if you're expecting a bounce at such and such level, what are you thinking? Like, open your eyes and like to the fucking world. Get a bigger perspective. What are you thinking? But that's 473, and that's the level of support. Dude, what do you live like in a fucking hole in the ground? You understand? So you're going to hear a lot of people saying, this is the level we should be looking for. This level here, level there, whatever. And there's day traders who set up levels in order to create trades, and they may get their bounces. They may be coincidence. There's not necessarily proven correlation between day trading strategies and fucking reality. Okay. So, but um, what I can tell you definitively is that we're breaking down pivot points, which should be support levels, because what's going on in the price corrections on stocks has nothing to do with the stocks. Like, nobody put in a bad earnings. Inflation didn't do this or that. Inflation is still seemingly a factor out there, but we're fighting it just fine. The economy is like flat, neutral, solid right now. Oh, hey, good morning, Marcus. And so you got to understand that these big moves on the market, they got nothing to do with something. It's all about risk money. Like, I mean, you have to understand that the end point in a distribution curve of allocating capital into investing capital, right? Maximally on one side. The other side, like zero, like never investing money. The other side, the absolute zero, the Kelvin zero, the space, the absolute zero of investing is total apocalypse, right? You have to understand that there's a trajectory from investing to not investing, and not investing, the other side of that is total apocalypse. And so if you think that geopolitical tensions don't factor into investing, you're completely wrong, because how close we get to, what's that movie where they're like fucking Mad Max? Like, how close we get to Mad Max is is on a curve. From, or fucking, the Statue of Liberty buried in sand, with the hand up at the beach, right? Or Planet of the Apes. That's We're on a variable curve from enjoying, an environment where we can risk money and take our money, which is ours, and loan it out to other companies and other places and other businesses and other people, because we have security in our environment. Now, the closer we get to total apocalypse, the more we need to start bringing that money back into our chest and into our chest, into our body and into ourselves and into close to ourselves, and hoard it and keep it safe, because those are our resources, motherfucker, right? So the reason the stock market's going down is not even entirely that there could be supply chain disruptions because of rising geopolitical tensions. It's it's because people want to risk less right now and keep their resources a little bit closer, because they don't know if they're going to need them. right? Because like if you have a whole shitload of resources and you're able to keep it during a total apocalypse, you're going to be better off. Say if you had lots of gold and water and all the things you could need, and a palace and a bomb shelter, place to, whatever. That's valuable. You can't have that if you don't have those resources close, and all of a sudden all of your paper money gets shut down and the electronics get turned off and you don't have anything left, right? So I mean, you just have to understand that logically that that's on a variable spectrum from yes, hell yes, it's wonderful. Let's invest. Let's pour all our money into all these different companies. Yay. To total apocalypse. Right? And everything in between is a gradation. And so as we have rising geopolitical tensions, that's it. You can figure it out. The answer to the question of why are things going down when nothing bad has happened to XYZ company and whatever, it's because people need more security with their resources, with their wealth, whatever they've generated, their hoard, in these kinds of environments. And you would think that would cause gold to go up, but it went down the other day, or it's been kind of funny during the last, rising geopolitical tensions. However, if you really look at gold, here's the graph of gold. Gold has been on a rise probably since the whole Israel, everything's been tensions have been rising, right? So although it's been up or down each of these days, in general, gold is going way up. But at some point, gold is not even going to be valuable. You know what I mean? Like on the total apocalypse scale, like if they had a futures for bomb shelters, like, those would be going up a lot more. Like after gold fails, bomb shelters go up, water, clean water, spears. You know what I'm saying? Gold doesn't protect you past a certain point, right? Yeah, you can club somebody over the head with a gold bullion, I suppose, but it doesn't help you much after a certain point. But that's what's happening. Okay, so each of these have their raison d'etres. Okay, all right. So what we're seeing here is, and in my opinion, from technical analysis side of things, is increasing momentum to the downside because we got this move here, which then pulled back up slowly. And then we have this move here, which is twice as big so far. And it hasn't started to pull back up yet. Now, the only other time I can think of when that happened, is during crashes, is during market crashes. So if we were to scroll back here, the only other time I can think of where we have uh, downsides that just keep going down and keep skipping like that. Let's go back to the pandemic drop for an example, but we could examine crashes in history, throughout time. So you see here we have that big drop, and then we have down, and then soft pull up, and then move down, soft pull up. Who would have thought, during all that it would just keep going down that much? Okay, like we're here right now. We're something, this isn't exactly the same, but you know what I'm saying? Like if you think it can't go lower, like what I said, is true. War has no bottom, because total apocalypse is at the other side of the equation here. So let's go back now. That was the pandemic drop, right? Now let's go back and look at the current move. Yesterday, we had Powell, I think it was yesterday, Jay Powell say something about the fact that dropping rates is definitely off the table now. And so that's why the market dropped. Now that's still going to add pressure to the market. That's a real, pressure. That's a real economic pressure. Um, but through all of that, through all of the real economic pressure that might be moving the market downward, all it takes is one of these kinds of geopolitical tension days to blip us down another this much. It should take one day. All it take is one heinous geopolitical day to give us that. It wouldn't even have to be that bad. It would just have to be something rising, something that's increasing the tensions. So until we have that kind of a day that actually exists in the unforeseen future. Do you know what I'm saying? Like this is a day we're going to get. You can presume we're going to get because nothing's changing. Geopolitical tensions aren't lowering. If they lower, great. Then that'll be less of a factor. But if anything happens, anything, then we get another one of these. And that doesn't matter if we're slowly inching our way back up, because then boom, we have a huge down day again. So geopolitical tensions really screw up your long side trading. You have to be really careful because lurking out there somewhere at any moment, we get the big red bar. And that's out there. And that's another reason why this is a great time to just sideline your money. I'm slowly getting out of everything. That's just happening automatically. I'm being taken out of my positions, right, by my rule sets. And when I look back at my equity curve, this will probably be a period where, my beautiful equity curve took a hit. But I got out, the rules, got me out. But then when you compare that to the market, like you take that same curve and you compare it to the market, I did better, than the market. So just because you have like this great system doesn't mean you don't take a hit when the market takes a hit. You just may take less of a hit, or uh, it gets you out, and you end up getting sidelined. So you got to watch out in the. So in my portfolio, I've got several things that are taking me out today. I probably have to get out of 3 or 4 things at the open. And so that's bringing my positions down from 30, 35 positions down to maybe 30, maybe 25 by the end of the day. Who knows? But that's automatic. That's a wonderful thing. Like, in other words, the system automatically guides you out as much as it guides you in and guides you through the trades. It also guides you out. There'll come a point here, but when we're looking at charts and we're trying to find opportunities, for instance, to slap like credit spreads into the system, uh, portfolio system of credit spread portfolio system, uh, you could still find lots of opportunities and get in them. However, you wouldn't necessarily want to, because you need to have also that macro. There's like above the system, there's even, the wanting to do this to total apocalypse spectrum, right? Like, so from investing, from putting your money to work, to total apocalypse. And one of the things I did that we're going to talk about in masterclass tonight, one of the things that I've done is I converted almost half my portfolio to iron condors and simultaneously hedged my deltas. And so we're going to learn in class tonight, in masterclass tonight, all about that. You guys are, I mean, if you missed that class, and you've never taken a hedging class with me, or anything about the deltas or any of that stuff, man, it's just going to be a tragic miss class for you. Uh, not trying to get you to go. I'm not trying to get you to go. I'm just saying, uh, you should, reschedule whatever you got going on, no matter how shitty I teach. Maybe I needed another coffee, or I've got a headache or something, and I'm not on my game, but you should show up tonight. It's going to be so critical to the next, cycle, to 10 years of your trading. And I don't know how often I'm going to go into it. So, show up. Class tonight, master class, can be all about hedging. And we'll also talk about a little bit about, some of the rules of the system and how it takes you out. We'll just quickly cover that. Hedging, converting to iron condors, which is the same thing. I mean, you can do that with shares too. I'll talk about shares trading just as much in case you're not doing spreads. That's okay. The hedging concepts will be the same and they will apply to you. All right. Well, anyway, we've got 7 minutes, 6 minutes until the market opens. There's no good opportunities this morning. I mean, for Carl, there might be something, but like Hollow, I'll bet you $100 Carl's going to trade Hollow this morning, HOLO. We'll see what he says in a second here, but I wouldn't touch it. And then we got Seco, but Hollow, because he's probably seen that blip around before. I just bet you $100 he's going to dabble with Hollow. Maybe not. Sell me my 100. I told you. And yeah, there's really not. Okay, Go EV is now worth less than $200 million as a company. There's this company. No, that's not even a valid ticker. So, all right. There's really no opportunities this morning. I literally was going to even cancel this morning's live, but it was important for me to show you because there's really nothing changed in the stock market. So it was really it was really important though that I needed to show you that what has changed is that we've entered this whole geopolitical tension side of things, and that's more about uh, you know um, security risk, security and risk to your assets and to your hoard security, hoard risk. That's totally different. Totally different than economic reasons. So, and it is also very instructive and educational for you to see that sometimes. Some of you probably haven't, maybe Daniel, um, but I definitely have been through the markets through different war times and stuff. And you see that, and you're like, but why? Why are we doing this? And why does it keep breaking support levels? And then you hear people who have only had maybe a few years experience trading say, oh yeah, we're going to hit support right here, and it might bounce a little bit and they get their little intraday trade scalp and then they think they're right, but like an hour later it breaks through and it continues to plummet, and that level that they said did not turn out to be support at all. It was just a coincidental zigzag, is what was really going on, and that probably works for them 30% of the time anyway. So when they're right, they think, yeah, see, told you. No, nah, it doesn't always work, on the other side. So anyway, all right, let's take a look. And we also had jobless claims numbers this morning, which came in line. 212,000 jobless claims was the forecast, and the actual number was 212,000 jobless claims. So absolutely on the money. So economically speaking, nothing large has changed anything. We do want to be watching rates. I got the 30-year up here, but rates are. Well, let's take a quick look at rates. We got a couple, 2 minutes, 3 minutes before the market opens. So rates are pulling back a little bit after hitting a particular high of 4.8%, and we're at 4.7% right now. I think that could be just, a pause, and it could potentially go back up, test break, and keep pushing. And that will create more actual, real pressure on companies. Now, of course, war and geopolitical tensions puts pressure on companies, but only to a certain extent. But inflation like that, that could affect the economics of all business. So anyway, but everything's somewhat stable at the open here. We've got 2 minutes before the market opens. And because it's stable and we've got Netflix earnings in after hours, and I'm wondering, how that's going to go. If it's a surprise beat, that's going to be incredible. I think that we might see some surprise beats throughout this earnings season. We'll see, knock on wood. But just remember that how good things start to get because of businesses could be countered at any moment by a big red drop because of geopolitical tensions. So it's not the greatest environment to be risking capital in overall, although you might be able to find some hedged places to put your money. And by that, I mean perhaps like the credit spreads. A credit spread is a hedged position, We could talk about that tonight. Why is a credit spread a hedged position? We can talk about that tonight. All right, market's opening in 1 minute, 60 seconds. I'll be very interested to, what do you guys think about Netflix? Is anybody gonna be doing anything with Netflix? I am right on the cusp of, am I gonna get, I have an iron condor on it with 60 point plus or minus break even, and it's dead center right now. So I mean, that's the actual perfect place I would want to be able to hold through an earnings release with an iron condor. If I'm right, I make a couple, like I think it's set up to make a couple $100, like 500 or 600 bucks. If I'm wrong, I lose 1,200 bucks. So I may be letting that go today. It's just, it's not, no, that level of risk, swing in your portfolio is something you don't really want to subject your portfolio to. ER risk is pretty heavy duty. It's much easier to just get out. Although the forecasted move is 45 points plus or minus, so I'm 50% more encapsulating the move, the expected move. So I don't know. I might stay in, although I might go ahead and liquidate it. We'll see. All right, the market's open. We're going to watch this for a few minutes, make some observations, and then we'll move back into the group. Because I have no reason to think that the market's going to do anything different today, and we're not really interested in putting on risk. There could be certain situations, so we'll watch for a couple of minutes here. See what we can think of. So far, little movement from the open. Let's go over to where we can see all these guys. Gold is rising, $2,400 an ounce. And our growth stocks are, I mean, what is this? A minute after the open, our growth stocks are mostly bullish, but it's pretty neutral. I'd say it's like 55, 45, probably going to equalize to 50-50. Seems people want Alcoa. Well, anyway, it's not really at any particular point of interest. Earnings was after hours yesterday, and so this morning, Alcoa is the hottest growth mover on our list. It's aluminum, so it's a commodity based, and an excellent place to potentially grab something, because commodities tend to do well in inflationary environments. If you wanted to grab anything, I don't think I will. I don't think I will. Let's see if anything else has popped up on the list here. $25. No, that's not. That's a fake symbol. No, nothing on the gap list. Sizzling, we've got AVTR, but it's down. Discover Card Financial Services, I think they're going to be bought out, so they're going to be pretty flat. Okay, they reported their earnings. All on ARM, United Airlines. Wow, United Airlines is flying. No, but they really are. Geez, what a huge day yesterday, and now continuation. It has been just 2 days of skyrocketing with American Airlines. They were at 44. They're hitting 51 now. Incredible results on United Airlines, and yet, it's kind of a difficult point for me to say to get in, and that's because it's not really broken out and in some kind of a growth cycle area on the technical analysis side. It'd have to be above this pivot point here, 58. So you kind of got to rule that out. Nike at the top of the list. Nah, not loving that. Let's see. AMD is doing good. Let's see. Well, AMD's continue to pull back and pull back. Continues to pull back and pull back. Other sizzlers are ASML. I think is going to be reporting earnings. Either they did. Let's see. They did yesterday. Okay, so ASML reported earnings. It seems like no change. Must have been as expected. Surprise, only 5% surprise. Was estimated 3.14 earnings. They did 331, so they did slightly better than expected. But apparently, before earnings, outlook wasn't very good. I don't know if that's going to get all bought back up now, though. That could. All right, back to the market. Looking at that, yeah, it's a little bit red. We've broken below the open, and S&P 500 and the Qs are definitely moving down. How's the Dow doing? The Dow is also moving down. So all indexes moving down more. And again, why is that? Why are stock prices going down across the board everywhere except for say Alcoa and other commodities and inflationary based indexes? Uh, because war, rising geopolitical tensions. People want to just take back their money. It's just about risk off type environment. That's all it is. And that can happen due to economic conditions. And then you see um, much more predictable behavior, including, huge moves sometimes during crashes. But, if something economic all of a sudden got screwed up and you have an economic crisis, then you see a drop and it makes sense. It computes. But these don't compute because the valuations of these companies aren't changing. This is purely the environment is less safe to put money into. That's purely that. People want to keep money closer to home right now. And that really hasn't changed. And like I said, even if we have a run for a couple of days, any moment, anything can happen on that geopolitical stage to give us one giant red candle again. And if it does, get your puts because that's all, the market's definitely going to respond. Now I'm hedged, so I am in puts. I'm hedged. But you might be able to go for a zero DTE day trade on it or something. But that's another way to sort of always be ready and on your toes. We'll talk about that tonight. Delta neutral portfolio management. All right, see you in class tonight. It is red across the board. The market is dripping. The market is bleeding. The VIX is rising. Oh, I want to take one quick look at the VIX with you guys. Yeah. So I wouldn't trust the VIX as far as I could throw my grandma. This VIX could easily be right now. It's at 18.32. This VIX could easily get to 19.56, where the high recently could easily get there. It would take very little. This is when the VIX is over 20. By the way, that's like risk off, total risk off environment. You can't do anything on the stock market. You can't even short because things just get so random, chaotic, and choppy. The volatility gets so extreme. It'd be like trying to bet on, two rivers when they come together, or just imagine an ocean that's completely turbulent and it's all whitewash. You'd be trying to bet on whether a particular point is going to go up or down a foot in that ocean, in the next 3 seconds, like a wave, like a boom. You can't do it. It's just there's too much turbulence. It's random. Becomes randomized. The VIX is a good indicator of uh, the uninvestability of stocks. Yeah, we're definitely seeing some drops now. The market wants to keep going down. People want their money back. That's all this is. This isn't, oh, such and such reported bad earnings. That's a bad sign for the economy. That's a bad sign for stocks, or bad sign for this industry or sector or whatever it is. Nope. This is just scary geopolitical stage. All right, enough said. I mean, it's just like we could just watch it all day. It's a blood red drop. What did you expect? That's the day today. All right. See you guys in class tonight, and I'll see you right now in the group. Thank you very much for tuning in. Stay safe out there.